Great. Jeff has asked, gold is frequently seen as a safe haven. Does that imply that there is an inverse relationship between gold and stocks? For example, when one goes up, the other goes down. Are there circumstances when both rise and fall together? Thank you.
Yeah, that's a good question. Generally, when there's some this is the wild card that why trading miners and precious metals, well, more so miners, but why this space can be difficult is for miners, there's a lot of times where gold mining stocks will rally with the stock market. There are other times where they completely flip and they're inverse to each other. Stock market up, gold miners down. Stock market sells off, gold miners are up. So it really makes it more difficult because you don't know which relationship it has. And literally it can change overnight. It can just flip again and you'll be like, it's not moving the way I was expecting. I wanted it to be a safe haven, but it's selling off at the stock market. So let's go back to the core question, which is, can gold move with the stock market? And the answer is yes. It can also disconnect. So let's go back. I kind of pulled this chart up. I've shared this chart many times before. So if we take a look at the let's go back to the left one. This is 2005, 2004, 2005, 2006. This is the weekly chart of the S&P 500 candlestick chart. Now the yellow line on it is the chart of gold. They both are moving up together and they're very strong. If we take a look at where we are today, this is 2022, 23, 24, and this year 25, both are ripping to the upside. So they can totally move together in certain market environments. Now, if we were to look at 2007 market top and just drag it forward, you will notice, well, I'll just go right here, that the stock market sold off, 20%, and gold for that same time frame rallied like 16, 17%. So, or I don't know. It's drawing a line based on the S&P 500, but obviously gold skyrocketed while the stock market went down. So that is the problem, is they can both move up together and then suddenly they can both go in complete opposite directions. That is why we need to manage positions and risk, because we just have to follow the price. We have to, if it changes directions or changes its characteristics and it breaks one of our rules, we get out. And I believe we're going to go into this at some point. I do think we are going to see eventually the stock market have a huge correction. I think we could come back down to these lows that we saw in February, and then I think, or March, and then I think, we could even break and go a lot lower. And if we look at 2007, same thing happened. The stock market did break the significant low, and then the market fell 50 something percent, and gold got pulled down with it, and they both sold off together again. So they both moved up together, they diverged, they moved in opposite directions, and then they both sold off together. And then at the end, stocks fell even more and gold's diverged and went the opposite. So they flip and flop, and that's what makes them such a difficult challenge. They're not just a safe haven. You can't, I throw that label out there because in very short-term analysis, some days people are nervous and we see gold go up and stocks go down. That's kind of the view I look at it. I do think we're going to see the stock market sell off at some point in a pretty big way. And I think gold is going to probably keep going up and diverge. It is in a strong trend. It could go a whole lot higher, as we've talked about. So that is how you have to look at it. You have to take it day by day, week by week. It could move with it or it could do the opposite. And that is the struggle of trading and trading different assets. You never know which way they're going to move. We can see gold and the dollar move up together at times. We can see them both sell off at times, maybe not significantly, but they do, and they can for weeks or months at a time sometimes. Nothing is fixed in the stock market. You can never really trust anything. Any relationship that's happened in the past doesn't mean it's going to continue to happen in the future. And we saw crude oil go negative, which I didn't know was possible. I think most of the world probably didn't know was possible. So that just goes to show that the only thing we can do is follow price and manage our positions, because nothing else really matters and we don't even know how it'll work out. So we just have to, that's why being a technical trader is light years ahead of somebody who follows the news and trends and has a bias and all this stuff. That stuff is all dangerous. eventually, if you're on a hot streak, it will catch up to you. And I know we've got a lot of members that have been trading their own money and investing for 20, 30 years, and they're still like, I need help. And I'm blowing up my account. I have huge inverse trades. I'm in the wrong sectors. I'm doing this, I'm doing that. Um, Eventually you can have a good run for a decade or two, and then you can lose it all on one really bad trade. So the key is to be diligent. And that's what I try and update. That's why we do these sessions, to try and knock sense into people and try and keep them sober as the reality and how easy it is to give back gains if you're not careful. One bad trade, not getting out of it, can do a lot of damage. So that's it in a nutshell.